APEMARS is being pitched beside XRP, Ethereum, Apeing and Stellar, but those names do not carry the same kind of risk or proof burden. The pressure point is simple: why presale marketing is leaning on XRP, ETH, Apeing and XLM to frame APEMARS. Top 5 crypto is the search phrase, but the real question is which claims already faced live market proof and which ones still depend on controlled sale conditions. The tension here is simple: the loudest claim is not always the part with the strongest proof. The pitch frames XRP as a cross-border settlement asset, Ethereum as the smart contract leader, Apeing as pure retail speculation, and Stellar as a payments network, then uses that backdrop to highlight APEMARS as a structured presale opportunity. Those details sound like one trade idea, but they are really 3 different types of proof: live market activity, product shipping, and presale marketing. That gives the story a hard anchor before sentiment starts doing the storytelling. APEMARS is described as being in stage 17 at 0.000025438, with more than $426,000 raised, around 23 billion tokens sold, and roughly 1,614 holders, alongside a deflation narrative built around scheduled burns and a bonus code promotion. In easy English, liquidity means whether enough real buyers and sellers exist when someone actually wants in or out. This is where structure matters more than surface excitement. For people typing top 5 crypto, the clean comparison is between live liquidity and projected liquidity, because those are not the same thing. Unlike the listed assets in the comparison, APEMARS is still asking buyers to trust staged pricing, projected listing assumptions, and ecosystem plans that have not yet been tested by open market trading. That detail is often where the risk moves from theory into actual exposure. The mechanism is narrative borrowing. If you place a presale next to liquid, widely known assets, the sale inherits some of their attention even though it does not inherit their trading history, infrastructure depth, or institutional adoption. For anyone searching KW, the useful question is not which upside number looks largest. It is which claim has already faced public price discovery. Once that mechanism is visible, the pricing story gets easier to read. That matters because a viewer can wrongly treat these assets as peers. XRP, Ethereum, and Stellar are already priced by live markets. APEMARS is being priced by its own sales structure, where scarcity, bonuses, and projections can shape perception more than public order book demand. That is why listed tokens and staged sales should never be treated as if they carry the same kind of evidence. This is why users, traders, and treasury desks can react very differently to the same headline. What remains unclear is how much real demand survives once the bonus-driven sale environment ends, and whether the token can build usage instead of relying on the category label of being the next presale to watch. The next things to watch are actual exchange access, liquidity after listing, and whether the project can point to product usage rather than repeating the early entry pitch. The uncertainty is part of the valuation, not a side note after it. That leaves top 5 crypto dependent on follow-through instead of headline energy. Until the market tests every claim in public, the cleanest edge here is knowing which parts of the story are liquid facts and which parts are still sales stage assumptions. Once the noise is stripped away, follow-through is the only thing that can confirm the pitch.